Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a look at the action in today's session. Thursday, October 12th, where we saw losses across the board, kind of a wild day intraday, and we're continuing to see that relationship, that inverse relationship between equities and bond yields reemerge, rear its ugly head, Ken.
Oh my goodness. Yeah. Well, apparently there was at 1 p.m. Eastern time, the Treasury held a 30-year bond auction, which they often do, and demand this time around was just terrible, and that caused a lot of selling in the bond market. It really coincided with a big jump in the 10-year Treasury yield that went all the way down close to 4.55%, and now it went all the way up to 4.7%. So rising bond yields, the culprit today. Losses in the NASDAQ, S&P 500, and Dow, not too bad. Small caps really got hit. So we'll get into that. But let's take a look at Vertex Pharmaceuticals, VRTX, KLA, and the chip equipment group. Got a couple of chip equipment earnings reports next week. So we'll take a look at KLAC. And finally, MakeMyTrip. Haven't talked about this one very much, but a dominant online travel firm in India.
Okay, well, we'll get to those three stocks, but first let's analyze the major indexes today. The NASDAQ and S&P down 0.6% today. The Dow off 0.5%, but you said it, Ken. Small caps really bearing the brunt of the weakness today, with the Russell 2000 down 2.2%. So we'll take a look at that chart soon. But first, a look at the NASDAQ, still holding right around the 50-day line to break a 4-day winning streak.
Yeah, and you have four up days and fairly light volume, and then what happens today? You get a down session, the win streak broken, and it comes in higher volume. So this is what distribution looks like. We'll add a distribution day to the NASDAQ's count. We had the follow-through day almost exactly 1 week ago on Friday. Things have been going pretty well, but these spiking yields today kind of kept the market honest. But overall, I mean, not a horrific decline for the NASDAQ here. Closed a little bit off its lows, but still having a little bit of an issue here at the 50-day moving average.
Yeah, we'll have to see if it can tighten up here and move out of that. That would be great to see. We'll quickly take a look at the intraday chart here and look at that just really falling off the table there around midday, recovering a little bit into the close. So at least we did get a little bit of relief and some buying, Ken. But as long as Treasury yields continue to be at these elevated levels, that's something that the equity market is going to have to contend with.
Well, on yesterday's video, we talked about that 10-year yield coming right down to the 21-day line, which is a very key support level to watch, and look at what it did today. It just kind of surged off that support level. So, yeah, this interest rate story in the market is not going to go away anytime soon. And honestly, I don't remember the last time a bond auction had such a negative impact on the stock market. I mean, these auctions happen frequently, but as interest rates really take center stage and are a focal point for the stock market, maybe some of these Treasury auctions are going to be a little more paid attention to. But what we know today was that demand was terrible for the 30-year bond auction, and that fueled a fresh round of selling in the bond market.
And let's now take a look at QQQ. We looked at the NASDAQ composite. Here's a look at the NASDAQ 100. So not getting hit quite as hard today and holding above its 50-day line, Ken. So what do you think of that?
Pretty impressive. I don't think it's we don't need to get too negative on the market here. We're still in a confirmed uptrend. We're going to get a distribution day also for the NYSE. But listen, we've had one now for the NASDAQ and the S&P 500. I thought the close for QQQ today was quite strong. It really didn't close near its low, but fairly moderate decline. So you still have some large cap techs that are fighting a good fight here.
And now let's take a look at the Russell 2000. Here's 0 RUS. Very weak, and so headed back towards its recent lows, Ken. I'll also take a look at the weekly chart here. So it's hanging around the lower end of a trading range that it has just really struggled to get out of.
Yeah, I mean, just hurt the small caps, particularly vulnerable to a higher interest rate environment. I was kind of scanning through the Russell 2000 to see where the weakness was. It was a lot of biotech, a lot of healthcare that we've seen come under a lot of pressure. Not so much, broad-based selling in the financial sector, which you might expect because it's a pretty heavily weighted sector in the Russell 2000, but mostly healthcare stocks, biotech stocks. So many double-digit percentage declines. It was hard to keep track of them all, but small caps in rough shape, but the broad market, still hanging in there.
Yeah, so we have one more broad market chart to take a look at, and that's the S&P 500. It has yet to conquer its 50-day line or get back above 4,400. So it seems like those are the shorter term levels to watch on the upside as it finds support at the 21-day.
Yeah, and this is probably one reason that we're still at sort of a 20 to 40% allocation here, even though we got the follow through day. We weren't telling people to all of a sudden become quickly invested and move right up to 100%. So we're still pretty cautious here, between 20 and 40%, and there's a chance that the S&P could fully break out of its downtrend here, but it's going to need to get above the 50-day line, which happens to correspond pretty close to that 4,400 level. So S&P still has some challenges in front of it after today, maybe the NASDAQ as well. But again, we'll see what Friday brings. We're going to get a bunch of financial earnings reports tomorrow, so we'll see if maybe that gives the market a lift.
Mm-hmm. And as go the bond yields, so goes the dollar, Ken, with a bounce off of its 21-day line to continue, at least for now, this pretty strong uptrend it's been in since July.
Yeah, and this is problematic. This is problematic for the stock market. So, just like the 10-year yield, it came right down to the 21-day line, and surged today in higher volume and moved above the 10-day moving average here. So, looked like we were getting a good pullback in the dollar, but it just came down and found support, and that also fueled selling in the market today.
Mm-hmm. And we want to take a look at the ITB ETF, US Home Construction, because we also know that this group moves with interest rates. And that is what we saw today, Ken, a huge hit to ITB, down 4.6%.
Yeah, definitely one of the day's worst performers, and no surprise when you see interest rates spiking like that. So you can see ITB recently came down to this very long-term support level, that 200-day moving average. Rallied in light volume. See how it kind of came down in heavy volume, and then it rallied in light volume. That's just not really a sign of strength. And you had volume pick up again today to the downside. So another form of distribution here, and not surprising to see the home builders under quite a bit of pressure here.
Mm-hmm. Well, among stocks of interest today is Vertex Pharmaceuticals, VRTX, on the edge of breaking out. It does look like it closed above this 367 buy point at 368 with a gain of about 0.8% in a third day in a row of elevated volume, after clearing an early entry around 358 or so. So this is one biotech stock that's looking good, Ken.
Yeah, definitely, and it's just known for a pretty consistent record of bottom line and top line growth. I mean, I've been at IBD for longer than 20 years, and I just have been following Vertex seemingly forever. They're mostly known for their cystic fibrosis franchise, but they do have a non-opioid painkiller that has made tremendous progress through trials, and that is looking like still a ways away from approval. But when you talk about a non-opioid painkiller, that could be something in very high demand. They're also involved in sickle cell disease, type 1 diabetes, so they're kind of expanding out from cystic fibrosis, even though they still generate a lot of revenue there. But I think the big thing with Vertex right now is a lot of optimism about this painkiller that is showing very good results in trials.
Mm-hmm. And now let's take a look at KLAC. A very strong day of outperformance here. It looks like KLAC up 3.8% and a pretty nice close here in the day's range. Managed to close pretty close to day highs above that round number at 500 after getting above the 50-day line in Wednesday's session.
Yeah, pretty impressive move today, and there was volume behind the move. And I was really just kind of trying to figure out, because the chip equipment stocks were all day among our top performing industry groups, up about 2.5% or so. So we've got some chip equipment earnings next week. ASML is a name that has really been beaten down, but often regarded as a bellwether. Also, Lam Research. So interesting to see a lot of these names moving today with volume. So I think it's a good one for the watch list, and for the stock market bulls that are optimistic about this follow-through day that we saw last Friday on the NASDAQ. To see the performance of a lot of these chip stocks today, I think is pretty encouraging. We had AVGO made a strong move above the 900 level. There was really broad-based strength throughout different areas of the semiconductor sector. So lots of good movement here.
So in terms of what we would want to see from KLAC here, do you want to see a digestion of this strong move a little bit, Ken? See it tighten up around that round number?
Yeah, I mean, just you always when you're looking at strong moving stocks, you always want to be careful of chasing. And you can see this has made a pretty strong move after it found support near 450. So it goes from 450 up to 500. That's exactly what I would do. I would have a little list of some of these chip equipment stocks. KLA is widely regarded as a really top name in the group, and maybe it consolidates near 500 below this recent high of 520. But just watch and see how it holds these strong gains over the past 5 trading sessions or so.
Yeah, that definitely makes sense. Okay, and MMYT, not a well-known name in the leisure travel booking space, Ken, but maybe it should be a name out of India, and it's really gone on a nice run since that last earnings report.
Yeah, and if we look at the weekly chart, to me, I mean, this basically looks like a first test of the 10-week moving average. I guess technically it hasn't touched the line yet, but it is holding support right where it should. I mean, trading has been a little volatile. The market's been kind of volatile, but this is really, when you're talking about online travel in India, this is one of the main players. Of course, they've got competition, but this is widely regarded as one of the, I guess, 800-pound gorillas in the space in India. So I think this one is worth watching. You see really strong top line growth in recent quarters. Earnings have really picked up the pace. You've got very strong estimates, and still a stock where you've got a couple hundred funds owning it. As this growth story continues to get discovered, you could very easily see more increases in fund ownership here.
Mm-hmm. Sounds good. Well, we'll have to see how that 10-week line test continues to unfold. Thanks for breaking that down, Ken. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all the details on that. We will see you there, and we'll also see you right back here tomorrow at the close to wrap up